All right, we're here. Hey, I'm Ed Parco, you're the host of Real Estate Jerky Live, and I'm here with Alison Daniels. She is a realtor up in, I guess, Twain Harte, right? And you're also a property manager for a while. I think you still do that, and you're a realtor. How you doing, Alison?
I'm good. How about you?
I'm doing great. It's a beautiful day.
It is. It's gorgeous up here too.
I'm sure it is. That's why we have our place up in Cold Springs and why we bought land in Twain Harte, so we can build our forever home, which COVID kind of stopped that for a short period of time. And with all the, well, a lot of people don't realize that with COVID caused a lot of the problems with lumber right now, and lumber is up 130%. So that means a 2x4 that was $1.79 is now $12. And so it's just, and I'm glad we didn't start our construction stuff, because it would have cost us like anywhere from $120,000 to $150,000 more for that house just because of the lumber and prices. So yeah, a lot of stuff has happened in the last year. But, I don't want to keep bringing up the negative. I want to bring up the positive. So you want to tell people about your background a little bit, and then we'll get in some questions?
Sure. So I have been in property management since 2004. I started just as an admin, and then I became a licensed realtor, which you have to have a real estate license in the state of California to manage properties, in 2008. And I've done property management since then. And I also started doing real estate sales probably about 7 years ago, just because I wanted to do it. It's exciting. I love helping people buy homes. I love shopping for homes. So I'm a girl. I like to shop, and what's better to shop for than homes? So, and so I currently work with Century 21 Wildwood in Twain Harte, and we manage homes in both the Calaveras and Tuolumne counties. And I do sales in Tuolumne and Calaveras County as well.
Okay. We were talking off air beforehand that, we were both talking to different things about the tenant issues that we're having going on in California. Let's just talk about California, right? Where they didn't have to pay rent for the last year. And what's the owner's rights for that? I'm not trying to be, this is a show about first-time home buyers, but I'm just saying, I think we were talking off air about how, because of the issues that you have as a landlord, a lot of landlords are going to be selling their properties, and then there's going to be a lot less tenant being able to pick up properties to live in. So you really should look at buying instead of renting.
Definitely. I mean, and also with most rentals, in order to rent a house, you have to qualify. Like, we vet our tenants very thoroughly, and the requirements that we have, and most property managers have, and a lot of landlords have picked up on this as well, is so high that you could buy a house. So to qualify to rent and to qualify to buy are very similar processes. A lot of people don't know also that there's a lot of down payment assistance. So if you do not have those funds for down payment, sometimes you can buy a house for the same amount that you can rent a house to move into to rent a house. So.
Right. And for people to know, we're doing this at our offices, so you're going to hear kids and other stuff coming through. So that, and dogs possibly. But yeah, and what a lot of people don't realize, especially in your area, in Tuolumne County, for what you can rent a place for, you can buy it for cheaper for that payment. And a lot of people don't realize that. And what I like about your area is we'll get into deeper, but the loan programs for up there, the USDA, I try to use all the time for first-time home buyers, because of the fact that it's 100% financing. All you have to worry about is your closing costs. And for most people, they have one or the other. They don't have both. So that is a great program for up there.
True. And I think also education for people who are considering either renting or buying. A lot of people who are in that position, they're kind of, they're afraid of the unknown. And so something that I'd like people to know, if you're thinking about, well, should I rent, should I buy? If you don't have a lot for your closing costs, that's something that can be also negotiated through your contract. So a lot of times you can write in a seller credit for closing costs. And so it also helps kind of offset some of those costs that you have to come into with to buy.
But the only time you run into an issue like that, if you're asking for closing costs, is because you guys are starting to see a lot of offers on certain houses, right? So you want to write the cleanest offer possible.
Yes.
And so what would be so explain to somebody what a clean offer is, because I don't want to talk the whole time.
No.
I want you to explain. So as an agent, when you're going to write an offer for a first-time home buyer, what's the cleanest way you can write that offer?
Well, if it's going to be a loan, and most of the times with first-time home buyers, it's going to be a loan, you've got to be very competitive with the purchase price currently, especially if there's a ton of offers, but also your terms. You do not want to ask for too much. For instance, typically we split, and it's all negotiable, so I don't like to say typically, but standardly we split title and escrow fees 50-50, and seller pays for like your county transfer fees. That's like a $200 fee. So if you want to make it cleaner, you could always pay that transfer fee. If there's an HOA, you could pay some transfer fees there. There's not asking the seller to do a pest report, making all the terms really tight is the best way to go in, especially in this market. Also, I like people to know that when you're going to buy a house, especially in this type of market, to consider it more of a marathon instead of a sprint. Right. You're going to go out there, you're going to see houses that you like that you're going to get beat out on likely. And instead of getting, discouraged, keep at it and keep looking. And eventually you're going to get a house that you love and an offer accepted.
Right. I think someone's trying to get in your office behind you.
Rick. Let me open it for him.
Yeah, no problem.
Oh, no, it's Virgil. He can wait.
All right. So, that's why you need a sign on there on air, by the way. He's probably wanting to know when the property is going to close that we're working on now. Did you get that? Did you get that appraisal resolved? And that's another thing, right? And that's another. Yeah. And that's another thing that we run into and people don't realize is when you have to get an appraisal done when you do a loan on a property. And in certain areas, and especially your guys' area, your appraisers are a lot older. And so they didn't want to go out and do appraisals during this period of time of COVID. And so they had to rely on a lot of out of the area appraisers, and they cost more money to come in the area. So unfortunately, sometimes it takes longer and it's harder to get appraisals done up in certain areas. It's getting easier, and certain things we can do, like Fannie to Fannie, like if you're selling a house and it's a Fannie loan on there to another Fannie, you can get away with a COVID-19 addendum like we did on other people's things. I won't say anything about you, but certain properties you can, certain properties you can do that, but not all properties. And sometimes you get waivers if you're putting 20% down, you can get a waiver. But let's go back to home. So I know you brought up in the beginning that down payment assistant, and I think you're probably talking about the Tuolumne County, right? The down payment assistant program you're talking about.
Yes. So Tuolumne County has a great program. They receive grants for first time. It's not even just first time home buyers. I think it's actually just medium income, and I could definitely get more information on that. So, but if you have a medium income and are going to purchase a home and have qualified for first with the lender, Tuolumne County actually has a program. Say that you qualify for $200,000 with the lender, but currently houses are, $275,000. Tuolumne County can make up that $75,000 and also help you with closing costs. They have some grant programs that do that. And so a lot of people don't know that, and you don't pay on that second until after either your first is paid off or if you sell the house. So you have that deferred for the 30 years.
Right. But you have to have it's income based, right? And so you actually have to make sure you don't go over that income. And for most people, what's that income? Do you know off the top of your head?
I don't. I can look at it, but it's.
I think it's like 55,000 or something. It's pretty.
I think it's a little bit more it depends on the family size.
Right. How many families? And that's the same thing with USDA. USDA, up to 3 people, you can make up to, I think it's 78,200 or right around there. And then, but if you have 5 people in the family, then you can make up to 110,000. That's why I like that program. And
so typically a lot of people on the USDA do qualify for this type of loan, second or grant assistance. Mm-hmm. Okay. A lot of those come through.
What else? What I was going to ask you about all right. So you were talking about, it's a marathon, right? Not a sprint. It's a long-term, because I know a lot of people get discouraged when they write a couple offers, but what you're saying is might write a lot of offers, right?
Yes, in this market. And if you're looking to buy in this market, then I would just prepare yourself to see a lot of houses and write a lot of offers, and eventually you'll get an offer accepted. But you have to have kind of thick skin in this kind of market especially if you're a first-time home buyer. And a good agent can negotiate for you and kind of cut through a lot of the red tape and the terms for you. So I would definitely recommend getting somebody that you like and that you mesh well with as far as a real estate agent.
Oh, definitely. Because agents, the most important. I mean, besides the client and of course the loan person, if you're doing a loan, but the agent is really, really important because some agents don't work with buyers, right? They only wanted to work with listers. They're a listing agent. That's all they want to do. So you need to find a buyer's agent. And what I like about you, and we had a gentleman on from down in our area, same thing, background, property management, which means when you go into a house, you probably know certain things about that house. You might have rented it at one point, or you might know, hey, we need to look at roof. We need to look at this. When you're having a first time home buyer, or any buyer that you have going to a house, how do you take them through it? Is there certain things that you look at to make sure there's, I don't want to lead you into a question. My question is, how do you take somebody in?
So it really depends. So the first thing you do is make sure that they're pre-qualified. So I usually tell them to contact a good lender. So that's the first thing, because the type of loan that they're qualified for really matters on the house. So for instance, as you know, with USDA or FHA, if you have a house that has a deck that's falling down that that the appraisal is going to probably call, that may not work for them, because it has to be a house that's habitable and ready for them to move in. So if the house is built before 1978 and there's peeling paint, we have to keep an eye on that and figure out if that's going to be an issue. Make sure that the roof looks like it's in somewhat good condition, because that's a large expense, especially if you're a first-time home buyer and you're going all in. Then paying for a new roof may not be in the budget within the next couple years. So just those kind of things. I try to, location is something you can't change, but you can change the paint color, you can change the flooring. So I try to have people, especially first-time home buyers in a lower purchase price, is kind of look at the big picture, what you can do with the house that would make it yours and make you love it more. So,
right. I mean, because I was referred somebody from up there. It wasn't from you, but somebody else. And when I talked to them, they have written so many offers, and the lender they were going through, they were buying a second home. He had them qualified for FHA. Which, yes. So that's the problem. First mistake. Out of the game, right? If you're buying a second home, you need at least 10% down, right? But if you're buying your primary residence, you can go VA no down, USDA 0 down. You got FHA 3.5% down, or conventional 3% down. So it's very inexpensive to get into homes these days. We're the only country we subsidize people to own homes, and the reason we do that is because we want people to build personal wealth through home ownership, and that's why why I do it. And like, you want to help people get into homes, because for most people, they don't have a 401k or 403b or any type of IRA. Their house is how they build personal wealth, and that's generational wealth, because they can pass that on to their kids, and then their kids can buy a house. I've had new buyers recently. They're the first in their family who've ever owned a home. Mm-hmm. And that's important for people to have stability, their own home. And like you said, if you're going to look to rent a place, you might as well, you're getting your credit report pulled. You might as well talk to the lender who's going to be able to look at where you're at, set you up for a plan going forward, and say, hey, it's not today, but in a year from now, or in 6 months from now, or 3 months from now, this is what we need you to do over that period of time so you can buy. Because just like you've seen, prices have gone up a lot in the last few years, and we're going to continue to see them go up because of the fact that we haven't built enough homes in your area, other areas all over California. We have just not built enough homes.
Well, and they're making the rules very difficult for landlords currently to even want to be in the landlord business. So it does make sense to buy and to be your own, to be your own landlord, to pay that money into your future, into your pocket. It's a great way to save money, because your house builds equity. So it's a great way to have some financial freedom.
And I mean, and there's might be, it's different back during, the downturn, and, the pandemic has caused certain things where we have to really be important, for people to go see a place, they have to be pre-qualified, at least in your area, right?
Yes.
You can't even get into a home without being pre-qualified, which is, all right. So Tuolumne County, Calaveras County, pre-qualified, right? Every other county in California, pre-approved, boom, got to be that. Well, but what's amazing is the fact that has caused people to go, okay, I can't even show you, which they shouldn't have been showing in the first place.
Right.
But now you have to go talk to a lender. You have to go here. What would you say is really important in the lender you work with that for your buyers? What's important to you?
Someone that's very responsive, someone that can answer questions and be a great team member with your realtor. Your realtor and your lender and your title company work kind of hand in hand as a team throughout the whole process from beginning to end. And so somebody that your realtor can reach out to. I mean, I think I've texted you at like 8:30 on a Sunday evening.
Don't tell anybody. Don't want my secret out.
So someone that is responsive to you and will work with you when because escrows have hiccups. It's another part of it why you want a realtor and a good lender, is because there's some things that need to be worked out through escrows that we can handle for you. And so to make sure that you have somebody who has answers, who can find a way out to when something gets tough. So,
So I have a question for you, which I didn't preference and tell you ahead of time because, this isn't a presidential thing.
Okay.
So my question is, all right. So while you had to have a client who didn't think they could have been able to afford a home, didn't think, right. So was there a certain client you can just look back on and say, okay, this was their situation, but they were able to get in? Do you have any story?
Yes. A friend of mine that had referred somebody to me for a rental. They were looking at a rental, and she was a friend's friend. So it was a direct referral. And I took her through the rental, and it was like $2,200 a month for this rental. And she said it wasn't really going to work for her. And I was like, have you thought about buying? Because you're going to be paying $2,200 a month for this house. You probably buy a house very, very comparable to this one for probably a little bit less monthly. And sure enough, we ended up buying a house, and she was so happy. So yeah, she was going to sign a lease for a year at $2,200 a month. And she bought a beautiful home. She has 4 kids. Each kid had their own bedroom, and she had a great master, a beautiful home. And she was very happy. So yes, that's happened several times. It's not uncommon.
Right. So basically what you're saying is, especially now that we're going to see a lot less rentals, right? Because a lot of landlords, after what they've gone through, even though they're going to get some PPP to help them get back 80% of their rents, possibly, they're going to go forward and say, I really don't want to rent any these places anymore. So, and I don't want to do the Airbnb thing. So sell it. So then basically what a lot of people don't know is first-time home buyers, when they come into a market and they buy a house, they take that house out of the market for years, right? Where if somebody's moving up or moving out of the area, they're leaving a house and, they're selling it and leave. So first-time home buyers takes it out. That's going to get up to 40% in your area, all areas of California. So you're going to see a lot more. I don't know if you heard about Biden's plan to have $15,000 towards, down payment to help buyers, first-time home buyers buy a house. He's pushing that out there. Well, that's going to cause 9 million more people to be able to buy a home. That sounds amazing, but when you have already what? I'm sorry, what?
I said you need the houses in order to do that.
Right,
that's going to be another part of his plan, hopefully.
Well, no, that's not part of the plan. So what's going to happen is now, so on an average house right now that's in say 300,000 or less, how many offers do you get on that house up in your area?
I had one that had 13 offers over the weekend.
All right, could you imagine 26?
Mm-hmm.
So, and that's the problem. These are great programs. Everybody should own a home. I mean, we want to get home ownership rate up higher, but we need to build homes. So the same thing I tell all of our local elected officials, yes, we have affordability crisis. Our crisis is we don't have enough homes built. And they're still stuck back on 2006 and 2007 when we overbuilt. We built twice as many homes as we needed, and it took a while to get those absorbed. Well, we have absorbed them, and now we need more. So we're going to have, so what I'm explaining to people is you're not going to see it crash, right? Do you think we're going to see a crash?
No, I think there's definitely got to be an ebb, though, because we've had a pretty good flow. So there's always going to be a little ebb, don't you think?
Well, no, I see. I'm different on that. All right. So I look at, long-term interest rates, we're seeing them have ticked up. And as each month this year, you're going to see inflation come in. And then that's going to add to the bond market going, oh my goodness, there's inflation. The Fed needs to do something and they're not doing it. Well, that's going to tick up over so many months. And then down to September, then we're going to start seeing it going the other way, less inflation. So what we're seeing is over the next 60 to 90 days, 120, we're going to see rates continue to rise. However, when I say rates continue to rise, I'm an old dog in this business. I got in, I was taking people from 13 to 9 and they love me. If I quote somebody a 3.25, they go, you're taking advantage of me. Well, that's where interest rates really, pre-pandemic, the average interest rate for conventional was 3.625. The average rate for FHA was around 3.25. Well, we're still lower than that for most people if you have a good FICO score. So I don't see rates. So a lot of times rates is what causes the issue for slowdown in homes. I don't see that. Then the other problem is I looked at a builder's, I was on a builder's thing and they're talking about how they're building and they don't have it. Here's where they're at with, see if in my hand, here's where they're at with houses they're building. And here's the demand for houses that they're building. And they don't see them reaching for years to come. And so we're going to see more of these houses appreciate in value. So for me, it's so important to get out the word right now, buy now, get it going. Yes. Because why do you
higher?
Well, yeah, down in Stanislaus County, they went 14% last year. Okay. Wow. Probably in your county, I haven't seen the numbers. I'm pretty sure it's between 9 and 10%. And that's a small, you guys have a small community with a lot less homes who need more homes. You need to do, hey, buy a piece of lot. Let's bring in a manufactured home on a permanent foundation, put on that lot, and there's your house. That's how we can get more in that area. We can do those construction loans too. I wasn't trying to toot my horn. I'm just saying you have to look at alternatives from what's out there. And that's what we need to do. Because I do not see the same thing a lot of people are saying. I see, homes crashing. I don't see that. We might see like the rates go up to 4%. And I'm not saying they're going to, but just if they did, that would slow things down a little bit. Like there'll be, okay, I qualified at 3%, but now I don't qualify at 4%.
Right. My purchase power isn't as much. Mm-hmm.
Right. So you're going to see that. But for the values of homes going down, and someone's going to keep this video, and if they go down, they're going to use it against me. But I just see going forward that I don't see that. And so that's,
Yeah, I would trust your inclination more than mine. So I go off what I've seen in the past, and I don't see that it crashing. I don't foresee that crashing. That was the last crash was due to, not having the place for some predatory lending and such that was going on. Those kind of regulations in place. But
well, I don't want to. They say predatory, but at the time the government told us get people into home at all costs. Do these programs, set up these programs, and so the problem was those programs were set up by the big banks at the time, but they always had to say it was the broker's fault. Well, the big banks sold them more than anybody else, and the problem is. Yes, we had a downturn because of the real estate market, because of these. What happened is we would have been fine if they sold those. If you watch that Big Short or whatever on Netflix or one of those series, they talk about this. If they would have sold those bonds at the right rating, we would never had this problem because nobody would have bought them. Those programs wouldn't work. So everything that happened back then will never happen again because of the fact of that would happen, not because of the regulation that was put in. But because there was too much money lost, right? Other people made money. I'm sorry?
I said live and learn.
Yeah, basically. And so we don't see that happening. And we're going to, we are going to go to a recession. They're saying 22, 23. But if you look historically at every recession we've ever been in, there's only been two that housing has one that housing went down drastically and one housing really slowed a lot. And that the recent one in 2006, 2007 through that great recession. And then back in the 80s when it had to do with S&L and stuff like that. Prior to that, any recession was a positive for housing because interest rates went down during that. So that's why I'm saying that we're going to see them possibly rise this year a little bit and then go into next year, start seeing them go back down.
Even if they rise to the 4% that we're not seeing, but that's still historically low.
Right. And that's what I think a lot of people need to realize. you talk to older parents or grandparents. What was your rate? Oh, 80s, I had 18% and I still bought, right? So yes, it's just our houses are more expensive now than back in the 80s, of course, but dollar for dollar, it's still worth it. So, I want to get off my soapbox because this is your hour, not my hour. So, or 30 minutes, whatever it is. What else would you recommend a first-time home buyer thinking about? I mean, is there stuff that they don't think about when they come to you and they're like, oh, I didn't think, how's insurance in your area? That's something a lot of people don't think about.
Our insurance is pretty high because we're in what's considered a high fire zone. So because of the potential of wildfire, because our area is surrounded by national forests. I think like 70% of the land in Tuolumne County or something is national forests. So our insurance is higher, so you do have to kind of think about that. But that a lot of times your lender helps with that as well, because when he qualifies you for the loan, he tries to put in a number for what your insurance is going to be. So a lot of times that's another reason that a good lender is good, because I would recommend a local lender, someone in the Tuolumne, Stanislaus, Calaveras, somewhere that knows our area. Rather than somebody, in the East Coast. I've seen people who've even had lenders in like Texas trying to buy houses. So there's a lot of things specific to our area that you have to consider. So yeah, our fire insurance is high. We have septic tanks and wells in our area. That's something that buyers sometimes don't know about. So that always get good inspections and know what type of water and sewage you have. Let's see, what other things? Oh, one thing I was going to touch on is that a lot of people do not realize that when they put in that new law, I think it was in 2020, maybe 2019, the rent cap and the just cause and rent cap. So a lot of renters thought that was going to be very helpful for them. But what that does actually is it's really preventing people from wanting to be landlords. And then what happens is that people stay in the homes. And so it doesn't do the natural movement of people so that other people can move into those spaces. And so it actually has not helped the inflation of the rentals. It's probably hindered it a little bit, because those rentals that were on the market prior to that, the landlord's like, forget it, I'm selling. So if you're stuck and thinking I need to move, maybe your house is being sold, I would definitely, before considering renting and paying, let's see, I just rented something $1,550 a month for a 2-bedroom, 1 bath. I would recommend looking into maybe buying.
Yeah, I would put that stronger. I would say definitely look into it, because your FICO score requirements are pretty close to what mine would be for lending. So we might as well.
My FICO, I think that you could actually get a loan for someone on less FICO credit score than our property management company requires for moving in for rental.
Right. So moral of the story today is landlords are going to get rid of their properties. Don't rent, buy, and don't wait. Right. Those are, I think, 4 things we should talk about. Right. We talked about.
Definitely.
Yeah.
Don't wait because I can't speak. Don't wait because the interest rates right now are amazing. So you should definitely jump all over it.
Yeah, definitely. Because I think a lot of people don't realize. I think the biggest thing, most people think they need 20% down still, or 10% down. I think the logic out there that they Google or whatever, and it says what they need is totally wrong. And they need to stop looking at that. They need to go to somebody like yourself, and then you can refer them to somebody like me, or they can come to me and then I'll refer them to somebody like yourself. Because I only want to work with the best agents, because the transaction needs to go smoothly at all parties. And that's everybody involved in that transaction, because if it doesn't, it's a bad experience for the buyer. Yeah. They'll never want to do it again. And then they'll tell everybody how bad it was instead of telling everybody how great it was, which it really should be. I mean, right. Our goal is to get people into homes. We want to build more personal wealth through home ownership. We want them to write the check to themselves. You're the same way. I mean, but coming from the property management background, you see it more than any other time that, hey, for what you're going to pay here, you could buy this place. Right.
Yes, definitely. And I love seeing people buy homes when they first get their keys. In a good agent and good lender, we absorb a lot of the stress for you. When things happen, we get a hold of it and guide you through it. So I feel like when people buy their house and they get their keys. That's the most rewarding thing, especially if they've never done it before. So
I just put your number on the screen in case anybody has any questions for what you do up there. And I should say that because up in the Tuolumne County, the cell coverage is good, but it's not amazing. So it's usually better for you to text them because that's the best way to get in touch with them. Before we go, anything else you want to add?
Not anything that. Oh yes. I'm sorry. There's a couple things I wanted to add. I wanted to ask you a couple questions I've written down.
Oh no, that wasn't what I was getting at.
No,
I just want to know. Yeah.
I just remember I had questions for you that I wanted to ask.
All right.
So currently, what are the current rates for your loan?
Well, we kind of touched on a little bit that rates, I think Fannie and Freddie put out there, they're about 3. I don't know. Sorry, I had a radio show earlier, so I don't know if we mentioned this or not. So I think rates today, Fannie and Freddie put out there between 3 to 3 1/8, right? For Fannie and Freddie. So it depends on your FICO score. Huge. We talked about, so the question, where are rates now? Rates are great right now. I mean, we're a little bit higher than we were during the pandemic, right? Because people were getting 2.99, 2.875 for the same thing, but now they're 3 to 3 1/8. So they're not that much difference. And I'm not trying to quote rates because I got to do APR and all that stuff. I'm just saying what Fannie and Freddie put out there.
Okay.
So, but the other thing I get asked all the time is where they're going. And I think I touched on that earlier about how I think they're going to go up for the next, 90, 60 to 90 to 120 days. We're going to keep seeing them tick up a little bit and then eventually go back down as we go into that recession. And that could be end of the year when we're talking, because it depends on inflation. And I think we're going to see inflation over each month tick up just a little bit to where it scares the bond market and the mortgage-backed securities. And if you don't mind me, I want to add something else to there. So that's where I kind of see where the stuff doing. They're going to go up and then come back down. What a lot of people don't realize is what drives interest rates, right? They hear, well, the Fed said they're keeping rates at 0. And what people don't realize, Fed rates are the overnight rates, the banks. That's what credit cards based off of, HELOCs are based off of, those kind of things. But the mortgages are based off of mortgage-backed securities. The 10-year that everybody talks about and the mortgage-backed securities are two different indexes. Occasionally they go in the same, right? When one goes up, they fall in the same path. Not always. So what happens is, even though the Fed's saying we're going to keep these low, the bond market and mortgage-backed securities are going, you guys are crazy. We see inflation, which you're saying is okay. And that's what drives those up before the market moves, before Fed moves, that kind of stuff. Now, when we see Fed lowering rates and then we see rates are going down, that doesn't mean they're tied together. It just means the mortgage-backed securities and the 10-year has been going down and the Fed's trying to catch up. So, and I think a lot of people, especially with you, when you're got somebody in contract, they're like, I just heard rates dropped. And they call me and go, hey, I heard rates drop. And I'm like, they actually going the opposite way. What? Yeah. I'm like, yeah, well, they did that because, and people don't realize that. So it's
very confusing.
Yeah, that's why I have hardly any hair anymore, because the rates move the way they move, and you can't focus on that. Focus on your payment. So when you get into contract, we'll disclose, we'll put on there. So what a lot of people don't realize is what the lender does these days, which is different than what we used to do. So escrow used to disclose all the fees. Escrow used to disclose everything. Well, then the law came into effect about 5 years ago that said lenders need to disclose escrow fees and everybody else's fees and put it on this thing called a loan estimate and a CD, a closing disclosure. And you can't have what your fees will be from here in the beginning all the way to the end the same. You got to show non-discounted fees and you got to show all this. So it's a very confusing process when we disclose now versus how it used to be a 1-page or a 3-page good faith estimate. It's a lot more confusing. So we take escrow and title fees and put them on our numbers, but that doesn't mean they're our costs. And I think a lot of people go, well, they have a lot of costs. No, those aren't our costs. Our cost is in that first box and you won't know this until you have a loan estimate, and I'll have to do a class on that. But that first box is where the costs that the lender's charging, whether it's points, processing, underwriting fees, all that in that first box. We don't have processing fees, underwriting fees, any application fees like certain banks have. And I'm not knocking anybody, I'm just telling what I see.
Yes.
In that box, the only thing we have in there is what the true cost for that rate is. I always try to go par on someone's rate, which means there's no cost for it. And then give them the option, should I buy it down to an eighth or a quarter? Sometimes that from par to the next one down is maybe $2,000. And it's, you have to look over a 20-year period of interest. Does it make sense? That kind of stuff. But, if you get some money from the seller, right, say you ran into an issue, which we didn't talk about, there's some repairs to be done. And instead of doing the repairs, the seller says, I'm just going to give you this money and you can use it for closing costs. And then at that point, if we have extra money, then we look at buying the rate down. So we absorb that, because closing costs that the seller pays, if we don't use it, it goes back to the seller.
You don't use it, you lose it. Yep.
Right. And so, I mean, there's, so when we look at, when you're looking at boxes, if you're doing a loan out there with somebody and that first box has points in it, you really need to shop around, because that's a problem. That's where it can get, a lot of people don't realize. They look at, because we have to put on there the impound account, right? So if you're doing a FHA loan or a VA loan or USDA, we have to do what's called the impound account. And basically what that is you pay your taxes and you pay the property insurance, and we have to have that impounded where it's in your payment, and that goes into an account, and it pays it for you twice a year in California for taxes, once a year for the insurance. But like in your area, I always say it's between, on average, when I'm talking to anybody, I say it's between $5,500 and $7,500 for your impound and your closing costs. However, in like your area, instead of, $700 a year for insurance, it could be $3,000 a year for insurance. So when we were talking about qualifying people, and you said people need to know your area, well, I start off at $200 a month for insurance. That way, if it's less than that, it's a big.
I think that's a fair estimate. Right.
So that's about $2,400 a year. But when we get people in, I had one just the other day, they're like, I got a quote for $3,600. I have a lady on my staff. She does insurance, 4506 Ts. We don't do insurance, but we send it out to people that we've had relationships with that say, and they do so much better. So she went from $3,600 down to like $1,500.
Wow.
And she was like, well, that, part of it was fair plan. When I first talked to her, I'm like, it doesn't matter. Each agency has a different price for the fair plan, which I didn't know that from the beginning. But when I have somebody now that's on my team, that's what she helps doing. We found that out, and we're like, wow, that's a huge difference.
That's one thing also, if you're going to say you just got pre-approved and you're starting to shop for your house, definitely once you start looking at a house that you like, that would be something I would say do right away, is start looking around for insurance and get rates, because that may take a little bit longer than you expected. Hey, Ed, I had a question. I know that a lot of people, there's different lenders you could go to, and there's either like a broker that goes through, you can go through, or you can go to like one, say like Bank of America or Wells Fargo, where they originate their own loans. What's the difference between a broker and a lender?
All right. So there's a broker could be an individual, or it could be a company. And basically what they do is they have their own line, but they don't use it to fund on. So basically they go through a wholesale lender to get different prices so that they can have more competitive numbers. I grew up in this business as a broker, and then I took a company to be a lender. And then after that we were mortgage. Anyway, so sorry, confusing today. So before that we were I forget what they called it. Then we became a lender. And then after that, I kind of came back in the broker industry, because one of the things I don't have to do is say no. Right. So when someone comes to me and because what happens is, if you're a loan officer working for a bank or for your own company, you are tied to their guidelines. You're tied to so the FHA, Fannie, Freddie, VA, all those have their guidelines. And then some lenders have their own on top of that, called LLPAs. And so during COVID, this was real huge. A lot of companies went from a 620 minimum FICO score to a 660, right? That was their own company's overlay. That wasn't FHA, VA, any of those. So for us, we just went to another wholesale lender and said, hey, you're still at 620? Okay, no problem. We'll put you through there. So it allows, broker, you see the ones on TV, the insurance companies that are brokers, they have multiple companies go through, same thing. We're able to go through other companies. Now, I'm not to say that certain lenders can broker a loan to another company. They can do that. But for most wholesale lenders, they only want to work with brokers. They don't want to work with a lender who's sending that over to them. And one of my top wholesale lenders, which I got an award for being one of the top 1% in the company, in the country for that company, which was, and they do 40 to 50,000 loans a month. So it was, yeah, it was amazing. I was shocked. I opened up the box thinking it was a trinket, and it was an award for being the top 1% originators. And I was like surprised. And yes, we had a good year, but my whole thing is about helping families get into home. And I think that's the most important thing. I don't care about the awards, but I took a picture because everybody's telling me I have to put more on Instagram, put more on the here, put over here. So I finally did. And now I'm doing more of these. So, which is, I like better.
Is that if you have a heart of service and you do it to serve others and to do something good for the world, that you're rewarded. So I believe that happens.
I think so. I mean, you can make money in this no matter what, but if you come into it for the wrong reason, you get the wrong people, you don't want to. I love first time home buyers. The first time they walk to that house and it's their house. I mean, there is, besides your baby being born or getting married, no other greater time in history, right? Because your second home is not the same as your third home or whatever. And I'm going to tell people right now, if you're buying a house right now, you'll never want to sell these houses because the values that you're going to see on these houses are going to continue to go up, and you'll never see this. So keep these homes for your kids or whatever, and let them have it. But
yeah. I'm currently working with some clients, first-time home buyers, and they're going to be like the first ones in their families for many generations to own a home. So it's amazing. They didn't know that they could, and just getting them to a point where they're feeling like they may be able to own a home. It's so fun to work with them.
Yeah. And then there's, like I said, there's no feeling like it helping somebody and they're so happy. I mean, that's why I love this industry. I mean, what else industry? It's not the same in the car industry. It's not the same, but helping somebody buy that home, that's their home that they've always rented. Now they own it. They can paint the color they want. They can make changes to it. As it appreciates, they get that equity, they can build it. And so I think it's so important to help people. And I'm glad that I get to meet people like you, and I work with people like yourself.
You too. Sure.
And I'm not just saying that. I don't ever, no, because people will say stuff. I don't.
Yeah.
It's not true.
You get to choose who you work with. I know that you're a sought after lender, and I appreciate that we can have a good team. So,
well, it's not, I don't care about, for you, I don't care who's on, I'll make room for you no matter what. And I'm going to put your number back on the screen so people can text you and get in a hold of you to find out.
If you have any questions, even if it's just about the county program or just how to get started, if you have no idea where you want to go or what you want to do, but you're curious, text me. I'm happy to help walk you through it.
All right. And I appreciate you being on here today. This is a new thing for me, and I appreciate you being one of my second, but I appreciate you being on here, and I want you to come back if you don't mind to talk about new things that come up.
Awesome.
All right. I'm going to say good. All right. Thank you for listening today. Thank you for showing up and watching us. If you are, and if you're on YouTube right now and you're watching this after, please subscribe, like and forward to other people so they understand what we do here. We help people get into homes, build personal wealth through homeownership. Alison, thank you so much for being here today.
Bye-bye. Have a great day.
You too.